Number four is actually quite an important one because it's looking
Mm-hmm.
specifically at income. Just to recap from
Okay.
previous week, different types of taxpayers. Remember, a taxpayer's responsibility is to contribute towards government in terms of its revenue, and all persons are taxed in South
Yes.
Africa. They can be a non resident or a resident. You'll see that in this chapter. Here they talk about the basis in terms of is it a residence based tax system or a non residence based tax system. So, in other words, if you are a foreigner and you are working in South Africa, would you have to pay taxes? Well, it depends. If you're a non resident, then you would pay taxes, but only on the South African source. Okay, so money that you would have earned in the country would obviously be taxed in the country. The same thing applies when looking at businesses. Whether it's a sole trader, a partnership, a closed corporation, or even a company, you always need to consider residency, basically. If you're looking at a resident, then you're going to be taxing that taxpayer on the worldwide income. So it doesn't matter where they derive the income, so long as they're considered a resident of the country, they're going to have to record the income that they've earned across the world. Okay, a worldwide basis, basically. All right, so this you've seen, this you should know from other subjects, the different forms of businesses. Okay,
Yes.
these are the four main types. You do get others as
Mm-hmm.
well. Something that's important to note is this at the bottom here. What defines an SBC and what defines a micro business? Those are two considerations when looking at the law. All right, so do you have any
Mm-hmm.
idea what the difference is?
No.
Okay, so an SBC and a micro business, when looking at micro, they call this turnover tax basically. So, turnover tax is basically a simplified version of the whole tax system that we have, where you have to submit a return, you have to provide for details regarding the deductions, and so on. Turnover tax is just going to look at one thing, your sales.
Okay.
So, that's going to reduce the burden in terms of admin. Right, businesses don't want more admin. Right, admin is considered inverted commas like red tape, compliance. Those things take up time and effort and resources. So if a business can try reduce the amount of admin, then they can focus on other things. Okay, things that might be more important initially when starting a small business. All right, so micro means smaller, okay, than small, okay, in terms of the SBC. So most businesses that are smaller in terms of size would probably go this route, okay, turnover tax, micro, purely because it's the easiest way to comply with the legislation in terms of paying your taxes. And then if they choose to process more admin, so for example, if they want to claim certain deductions, then they're going to use this form of structure, okay, or classification, right? SARS gives the SBC special deductions, okay, which you'll only see later on. When we cover capital gains tax and we look at the use of different assets and so on, you'll see there's a section called allowances, but allowances specifically for assets that are being utilized. So, for example, machinery, vehicles, those large items of equipment and machinery that a business would need to operate, that would fall under this, okay, the SBC, and then you have accelerated, accelerated deductions. Okay, so that's just something to consider when looking at the benefits or the disadvantages. There are some disadvantages as well, because there are certain requirements that need to be met in order to be classified as either an SBC or a micro business. Okay, so when I did the video on, I think I did it, when did I do it? I think I did it over the weekend, and then I sent the links through for them, for both actually, for our first
Yes.
session and the second session. I made a note in that video that on this particular set of notes, you will see this checklist. Right, and this I
Mm-hmm.
took from the textbook, the Unisys Study Guide,
Okay.
and this is a great summary of the two different types of businesses, an SBC or a micro. Okay, so when looking at SBC or micro, you have to follow the legislation. Okay, when looking at the tax tables, here's the tax tables 2019. This is the one that you're going to have to use for your exam. You'll see there's categories here for an SBC and a micro business. And those categories outline the taxes that will be paid on the taxable income that a company is generating, okay, a business is generating. Here, income tax for companies. Right, so normal companies would have to pay 28% tax. If you are considered an SBC or a micro business, then you have certain benefits because if you look at these tax tables, you'll see an SBC doesn't pay any tax on the first 79,000 and then they pay 7% on that category, okay? They pay 21% on this category, and then if they make more than 550,001, they're then going to be taxed as normal companies, okay? 28% tax. Right, so this is a benefit if you meet the requirements, but you have to meet the requirements before you can apply this tax table. Right, so remember it's either 28% flat rate if it's a company, or it'll be sliding scale based on do you or don't you qualify for being classified as a SBC. Right, if you don't, you might still qualify as a micro business depending on your structure, okay, your company or your business. So here, if you're meeting the requirements, then you're even going to have a bit of a better scenario because now it's only 0% on the first 335,000. Okay, but remember there's a difference here. This is turnover. Here, SBCs have taxable income. Okay,
Mm-hmm.
that's something to note. Okay, remember if it's taxable income, it's after deductions, right? So SBCs can make use of deductions. That's quite a nice advantage that an SBC will have over a micro business. A micro business doesn't have deductions because a micro business is only going to be taxed on turnover, and turnover relates to sales. All right, does that make sense? I'm just trying to recap a little bit
Yes.
from the last session that I had recorded, just so you don't miss out. Maybe when you have some
Okay.
time, just watch the video and just go through the content, and then you'll see me discuss that
Okay,
again.
well.
I do differentiate between the different types of businesses, and just look at the legislation. Can remember the legislation guides you in terms of what you have to do when looking at tax, and different types of businesses and how they're taxed. Does that make sense?
Yes, it
Is
does.
it okay? All right, so let's go back to this table. Right, so when you get a question, and this I've seen UNISA actually test quite often. UNISA likes giving questions regarding this, SBC and micro, and they might even give you a theory question regarding a particular business, and then that business might have natural shareholders or unnatural shareholders. When I say unnatural, we're referring to those juristic persons. Right, so a company or a CC would be a juristic person. A juristic person. Okay, juristic meaning in the eyes of the law, they're seen as an individual and they can transact and they can do certain things. So if I'm focusing on this, okay, a shareholder, if a shareholder is a juristic person and they're not natural, because they're not natural, they cannot be considered an SBC or a micro business. So you have to have a situation where you have natural persons only. It must be a natural person. It must be a natural person. It cannot be a juristic person, being a shareholder of a particular company. And that's the first requirement. So when looking at SBCs and micro, the first thing you need to look at is, do I have a natural or a juristic or unnatural person, basically. Right, that's the first check. Right, if you've got that, then you can move on to the next check. The next check is, does that individual, okay, does that shareholder hold any equity, okay, any shares? Right, they have to have no equity shareholdings. Right, you can't hold shares in different companies because then that would fall outside of the scope. Right, remember the scope for an SBC and a micro, we're looking at very small businesses. Right, so if you can tick that, then you move on to the next criteria. Right, gross income or turnover. How much does that business make? Does the business make more than 20 million, or do they make less than a million? If they make less than a million, then the micro could be a consideration. If they make less than 20 million, then they can fall under SBC in terms of classification. Right, and then if you've identified all of those criteria points as being correct, then you keep going. Right, investment income, there shouldn't be any. Right, investment income could be something from like rental of property or something similar. Investment income, where you have investments generating income. And then you've got private company. Can it be a private company? Yes. Okay, private company, yes. Right. Remember private company, but with natural shareholders. Natural meaning people. Okay, so you and I. Right. So can you open a private company? Yes. Okay, you can be one shareholder owning a private company. That's possible. Right. There could be multiple shareholders owning a private company. It doesn't matter how many shareholders you have as long as it's a private company. In other words, you're not listed on the JSE. Okay, it's not public and it's not a CC. Okay, well, remember, CCs, you can't register new ones. So any new business that is registered would be a private company. And then year end, for an SBC, it can be any year end. For a micro business, it must be the same as individual. So in other words, March to Feb. Right, and you have to go through the checklist. If you don't meet one of the requirements, let's assume there is not retirement. Let's assume there is investment income. Okay, if you cross that one, so in other words, you don't meet that requirement, then you cannot be considered an SBC. Right, so the rules are very strict, and the rules have to be strict because there are benefits of being classified as an SBC and there are benefits being classified as a micro. So you have to meet every single one of the requirements. If one of the requirements aren't being met, then you cannot register and pay taxes as an SBC or as a micro business. Is that all right?
Yes.
Okay, so it's very important that you remember this table. This table I use always, okay, when there's a theory question regarding this, SBC or micro. Right, you literally just need to remember this checklist and you just go down the list. Yes or no, yes or no, yes or no, yes or no. Right, if you get a no, then the answer is obviously not SBC or not micro. Right, and UNISA can test this as a theory question. It will probably come up as a theory question. The chance of it being theory is more likely than not in terms of workings and calculations. Okay, workings and calculations are very simple as long as you've got this, the tax table. Right, all you would literally need to do is either determine the taxable income or determine the turnover. And once you've determined that, then you literally just apply the table. Right, it's as easy as that. Okay, so the workings of the calculations that can come up for this particular section aren't too bad. They're quite simple to deal with, but the theory is quite difficult because you need to remember this. And obviously, you won't have the luxury of having your notes with you in the exam. So you'll need to know these 1, 2, 3, 4, 5, 6 criteria points when addressing the theory question. And if it's a theory question, you actually need to go through every single point. So don't just assume that, well, okay, I can see number two isn't being met in terms of the business. And then I can just say, well, number two isn't being met, so it can't be an SBC or micro. Right? You can't do that. You have to go through the whole list because UNISA might give you marks for all those other criteria points that are necessary in order to meet the definition of being an SBC or micro. All right, Melanie, is that okay? It's quite a long discussion there regarding the two different
Yes.
classifications, but it's an important note because, as I said, it does come up quite often in tests and exams.
Okay.
Okay. All right, just a note here about the budget. We did speak about it a little bit
Mhm.
last week, so I'm not going to speak too much about it now because
Yes.
it's also a bit old news. Right, the budget came out in Feb, but we're
Okay.
already in April, so it's not
Mm-hmm.
that relevant now. But there were some interesting things that came out of the budget. So maybe if you can tell me, did you hear anything good, bad, or ugly from the budget? Can you think of anything?
I know there was tax relief for your income, for income tax.
Correct. That's good. Yes. Individuals
Yes.
had some income tax relief. Good. Was there anything not so good? Bad?
Um, oh no, I remember the petrol price, the
Yes.
government portion increased.
Good. Yeah, the fuel levy, not so good. Okay, the fuel levy went up. Okay, it always goes
Yeah, not
up.
so good.
And there were other things as well. Sin
Yes.
taxes.
Yes.
That also always goes up. Okay, and
Mm-hmm.
even with the sin taxes, before they had a category. If you go download a summary of the budget, you will see there's a new classification. It's called heated tobacco products. Before, those e-cigarettes and those type of products weren't taxed.
Yeah.
And now the government has included those products as part of the sin taxes. They've added that product to the list of products that need to be taxed according to the legislation. So that was also something that came out in terms of not being good because that's an increase in taxes. All right, for certain individuals, okay, individuals that obviously consume those or use those particular
Mm-hmm.
products. Right, and then ugly, I could maybe say is maybe the government spending cuts. That wasn't viewed very positively, especially by the unions because of
Mm-hmm.
potential job losses. Okay, so government
Mm-hmm.
spending decreased quite a bit. All right, but the budget wasn't that how can I put it exciting. Normally they announce a few
Yes.
more things regarding like
Mm-hmm.
individuals and taxes going up and things like that. But it was actually quite a good budget overall. Obviously, you can't make everyone happy. There are going to be certain individuals that aren't
That's
happy with the
true.
budgets, but it wasn't a shocker.
Mm-hmm.
People were expecting that to go up again, and that didn't happen. So it
Yes.
was quite a relatively, how can I say, well received budget. Okay, from a balancing act point of view. Okay, all right. So the reason
Mm-hmm.
why I mentioned that is because of this income. Okay, remember what does the budget do for the country? Well, the budget is an expectation in terms of government revenue. Okay, government is going to receive revenue from its citizens, its companies, businesses, everyone basically. Right, so that budget basically creates a prediction, okay, or an estimate of government's income, their collection, right? Where are they going to collect? Right, and a lot of that revenue is derived from businesses. Businesses contribute a significant amount of taxes towards the country's revenue. Okay, so if I'm looking at study unit 4, that's what I'm focusing on. I'm looking specifically at income. But remember, it's income for the business. And then that income is then going to be taxed according to the tax tables or according to a flat rate, depending on how we're registered. So the learning outcomes here are quite specific. This is the first part of calculations. When looking at this definition of gross income, gross is what you're going to start with. And then remember, right at the bottom, you're going to have taxable income. That was that little
Mhm.
diagram, or how can I say, template, the formats that I gave you last week. Okay, so taxable income
Yes.
is the last component of that structure in terms of workings and calculations. Right, so when you do any working or any calculation question, you have to always get the structure right. So when I start a question, I always write down the general structure and I leave a few lines and stuff so that you can put in workings, you can put in answers and so on. But if you've got the structure and if you can picture that working in your mind, it's quite easy to then apply everything correctly. This is study unit 4, so the only thing you're going to look at here is income. So in other words, the first line. I think I've got a diagram here later on. Where's it?
Okay.
There's it. Okay, here's that diagram. Okay, this is what I showed you in the first set of notes. It's an important template. Right, this template is going to be giving
Yes.
you the structure that your answers need to be given as in terms of the submission. Okay, your answer to UNISA. So what am I looking at here in study unit 4? I'm looking at this line. This is the only line that I'm looking at. Right, and then when you look at other study units, UNISA does quite a good job at structuring this because deductions and allowances is a separate study unit. Okay, there's a unit for that. And then taxable income, not income, taxable gain, capital gain, there's another study unit for that. So each study unit that you cover focuses on a separate line, a different line. Right, deductions are covered in one unit and then allowances are covered in another unit. They're slightly different and we'll discuss what they are later on. Right, so that's the focus. If you can understand where this fits in, okay, where does this fit in? On that line, okay, that red block. That red block is highlighting where this applies. All right, so study unit 4, what does study unit 4 cover? It covers the criteria, okay, the legislation that I need in order to identify that. Items that will go under the income. And that's what you're looking at. Okay. Right. So context is important. If you know what you're dealing with, then you can basically structure your answer correctly and you can include certain things as necessary. For example, special inclusions, okay, exempt income. Right, I didn't mention those two in the learning outcomes, but those are two other things that are specifically covered in study unit 4. Okay, is that all right? Is the structure okay? Is the overview okay? So do you know where this fits
Yes,
in?
it's fine.
Okay, perfect. All right, so just to
Yes.
start off with some general questions. The first one, an individual company renders a service. Okay, so imagine running a business or owning a company and you are providing a service. Will tax be paid on this income? What do you think? Will it?
Yes.
Okay, if you say yes, you need to explain why. So, why do you say yes? Why would you have to pay tax on this income? What could some of
Because
the
this is
reasons
part of your
be?
business.
Part of the business? Yes. But if it's part of your business, what happens if your company, if the head office is based in Germany and you're operating in South Africa? If I render the service in Germany, am I still going to pay tax in South Africa?
You would have to pay the tax in Germany.
Yes, because it's a head office. So the head office obviously
Yeah.
identifies the residency. So again, we need to look at this whole idea of residency. Okay, is that company considered a resident of South Africa? If so, then they're taxed on the worldwide income. Right, so if they are considered a resident, it's worldwide income. It doesn't matter where you are in the world. If you are considered a resident of South Africa, you will pay taxes in South Africa on all your income from anywhere in the world. But if your head office is in Germany, well, then you could say, well, you're not a resident of South Africa, you're actually a non resident of South Africa. And if that's the case, then you're only going to pay tax in South Africa for income that was derived in South Africa, which they call it a SA source. And that's something that you need to consider when looking at the inverted commas, okay, the residency. So in other words, where is that company based and where does that company carry out its operations? Right? And that's quite specific in terms of legislation. So you'll see SARS actually outlines a few criteria points that will distinguish whether a company is either in Germany or in South Africa as being either a resident or a non-resident. Right, and then remember we said previously, can you dispute it? So, for example, let's say your head office is in Germany, but for whatever reason, SARS believes you are a resident and they tax you as a resident and not as a non-resident. Can you dispute that?
Yes, you can.
Yes, you can. Good. And you're obviously going to have to go through a process, and then you go back to chapter one or
Yes.
two or three. Okay, whichever one had
Mm,
the whole diagram. Okay, where we start at the top where we have the tax and SARS. Okay, so you basically discuss it with SARS. If that doesn't happen, then you object, then you appeal, then you look at alternative dispute resolutions, and then you take it further. You take it to the tax court or the high court or further courts down the line, depending on how far it goes. Okay, remember, highest court in the land is which one?
constitutional.
Good. Okay, and you can only go to the Constitutional Court if you basically disagree with the law, right, with the legislation. Right, so if you want to change the law, if you don't agree
Mm-hmm.
with this, you can change it, but it needs to be taken to the Constitutional Court. And if the Constitutional Court rules in your favor, they actually make certain amendments to the Constitution based on rights, okay, human rights, fairness, equality, all of those things. Okay, next question. An individual company disposes of an asset. Will tax be paid on this income? What do you think?
Mm,
Do you think there'll be taxes here?
I don't think so.
Why? Why not? You're right. Why?
Um,
What are you
I'm
selling?
sure that um, I'm sure we would have paid tax for this initially
Okay,
when you
when you say
purchased the
initially,
asset,
sorry to say that again,
like
yeah?
VAT. When we purchased the asset, we would have paid VAT for this already.
Oh, okay, yeah. VAT is something completely different because VAT is consumption tax. So VAT is when you purchase an item, but if it's a business, if it's a company, there's obviously going to be input VAT and they'll be able to claim that. So VAT is a separate tax category or let's say legislation. Okay, VAT is its own legislation in terms of compliance. So if you're going to be looking at VAT, that's something completely different. Right, so the point here actually relates to this. It's a non-current asset. So that's like selling your vehicle, okay, or your home, your property, plant, and equipment. Okay, if I'm selling PPE, that's not viewed as income. What is that viewed as? Capital gain, or gains, or loss. All right, and that's what you're looking at here. So something else to consider. Right, not only do you have to look at residency, if you're rendering a service, well, is rendering a service income? Yes, it is. Okay, but we need to
Yes.
now determine where is the income. Is the income abroad or is the income at home? Okay, is it local or is it international? Is it residency in terms of, well, what is the residency in terms of non resident or resident? That's something to consider here when looking at when something is income. But if something isn't income, if I dispose of an asset, would that be income? No. Okay, that wouldn't be considered
Mm-mm.
income. and it's not considered income because it falls under a separate category, capital gains. Okay, so capital gains, capital loss, that affects non-current assets, assets that are bought and sold, right? Not trading inventory. If I'm buying
Income.
and selling stock, okay, buying and selling stock would fall under that point. That point. Okay, that consideration. Right. So is there a difference between the above two transactions? Yes. Okay. The first thing is
Yes.
income question mark. That's the first thing. Right. Is it income or is it something else? Okay, the first one was income. The second one wasn't. It was something else. Okay, so remember, study unit
Mm-hmm.
4 is focusing specifically on income. What falls under that first heading? Okay, when looking at that template, what falls under income? That's what you're looking at here. Okay, what other differences? Well, the second difference is resident or not. So, in other words, is the amount, is the income taxable or not? It could be or it might not, depending on the situation. Okay, and that's why you have to look at this income. What defines it? What makes income income? Right, it's basically a set of rules that you need to identify based on SARS's requirements. Right, so can we get different types of income?
Yes.
Good. Okay, there are many different types of income. Rent income is different from investment income. Investment income is different from services rendered income. Services rendered is different from sales. Okay, so all of these different types of income, all, okay, are classified as income. So if you get different types of income, right, the main consideration is the income taxable? So in other words, do I include the income or not? Right, sometimes you have income that isn't included, and we call that exempt income. Right, is exempt income still income? Yes, it is. But is it
Yes, it
taxable?
is.
No, it isn't.
No.
Right, because you have this exempt income here. Right, sometimes you have things that aren't considered income, but SARS deems it to be income. Deemed income. Okay, they don't call it deemed income, they call it a special inclusion. That's what they call it. All right, so this word income, when I say can you get different types of income, I'm referring to income from a classification point of view. So, in other words, when you look at tax, in tax, you have to either look at gross income. Okay, gross means everything. And then if it's gross income, okay, you could have certain income items that are exempt, or you could have certain income items that aren't income but are specifically included as part of gross income. So I'm using the word deemed because it's not income. It doesn't meet the definition. When we look at the theory, you'll see what I mean. We'll discuss the criteria, and that'll probably be a bit clearer when we look at that. So just to remember, just to like recap, income can either be gross income, exempt income, or it can be not income but deemed to be income, and that's included as a special inclusion. And that's what this chapter is looking at. Study Unit 4 is focusing on this one concept, income. What defines it? What makes income? Are there any types of income that shouldn't be included? And that's obviously exempt. And should there be any things that are excluded but should be specifically included? And that's the special inclusions. Right, so will all income be taxed the same? Well, the answer is already there actually. Resident versus non resident. Right, so you do get different scenarios where tax doesn't always apply, and if it does apply, it might not always be, inverted commas, consistent. Okay, so in certain situations, you'd have to apply the tax, and the income would be taxed according to the rules. But sometimes there are certain exceptions, okay, exceptions to the rule, and it isn't classified as taxable or it isn't included. So, how do we know what income is? Any idea? What's going to guide us in terms of what is income? All right, so now we've really discussed income in quite some detail and we're posing some
Hmm.
questions. So the last question is obviously, well, if I know what income is, how do I actually define it? How do I actually identify it? How do we know what income is? Any idea?
It obviously has to have a specific definition or
Yes. Okay, legislation, rules. Okay, SARS. All right, so income is actually defined through the legislation. Okay, so the Income Tax Act, okay, will define what income is, and then there will be case law that will support whether something is or isn't income. Okay, because remember we spoke about disputes. Sometimes court cases, or sometimes I should say, sometimes disputes are taken to court, and then those court cases have a judgment, right? And those judgments basically set a rule of precedent whereby any future scenarios that are similar would also, okay, have the same judgment in terms of the case law, right? The law of precedents. And that's what we looked at previously. So we're looking at how that affects what income is, okay, the classification. All right, so here's the first part. Okay, slide number 1. First thing that we need to identify, very importantly, is this: resident or non resident. So, how do I determine if something is, or if some business is a resident or a non resident? Well, how do we determine if a person is a non resident or resident? Well, remember, person means individual. Okay, we're looking at natural person. Okay, it can be juristic, but if it's juristic, it's a little bit different. Okay, if I'm just talking first in terms of individual, um, do you have an idea? Let me ask you rather before I give you the answer. What determines your residency? Any idea?
um, I think you'd have to be working and earning an income for a certain period or so.
Okay, that's close. Yes, they call that a physical presence test. Okay, this is in the notes. Physical presence test. All right, so for an individual, okay, so we are individuals, right? If we go work abroad, let's say your company sends you to Germany to work for a few years, all right, and you are outside the country for the entire year for 365 days. Okay, would it be fair to consider you as being a resident if you've been out the country for 365 days?
No.
It wouldn't be, yes. So SARS provides for that in terms of residency and non residency. They basically look at the physical presence test and they look at the 183-day rule. Okay, and they look at, well, during the last 183 days, were you in the country or weren't you? And if you were in the country, and if you were in the country for a certain period of time, then they could classify you as a resident, even if you're a non-resident. In other words, you're you're a German, but you're working in South Africa. Okay, obviously that German is going to want to go back to Germany, right? Because they're a citizen of Germany and they're only on contract in South Africa. And they only work in South Africa for a few days, maybe 270 days. All right, because they've worked in South Africa for 270 days, even though they're going to go back home and they're going to go spend the rest of their life in Germany, they could still be considered a resident for that period of time. So from the day that they set foot in the country, all right, and for the income that they generated. they could be taxed on that amount. All right, so the legislation is quite specific. Fortunately, you're not going to have to look at an individual, okay, because this is Tax 2601. 2601 is looking specifically at this, a juristic person, right? So a company, either a sole proprietor, maybe a partnership, maybe a CC, maybe a company, right? But a juristic person would only apply to a CC or a company. Okay, that's something important to note, right? If it's a person, then you'd have to look at a partner or a sole proprietor. That's different, right? So juristic person, CC, or company. Okay, so what defines residency based on this? Okay, company and CC. Well, if you look at the legislation actually talks about this incorporation. Okay, was the company incorporated in South Africa or not? Incorporated, do you know what that means?
Established or formed.
Yes, perfect, good, registered. Right, so if you registered a company in South Africa, have you ticked that first block? Yes, you have. Right, the second thing you need to consider is has its place of effective management in the Republic? Right, so this effective management is inverted commas, okay, because this is where disputes can come up. Right, because remember, you might have a head office in Germany, okay, but let's say the South African operations are the biggest. Okay, Germany is that big, South Africa is that big. Right, so obviously, if that's the operations in Germany and that's the operations in South Africa, well, SARS might say, well, based on effective management, right? Effective management. Do the managers there effectively manage that whole organization, or does this organization effectively manage the organization, right? And that determines, okay, if it's a resident or not. Right? If it's a resident, then they have to pay taxes on the worldwide income. If it's a non-resident, then they don't have to pay taxes on the worldwide income, and they only pay taxes in South Africa. Right? And there are some guidelines. Okay, we spoke about practice notes. Right? There are also interpretation notes. So South African Revenue Service, SARS often brings out different interpretation notes when they actually look at the law. Okay, because remember, who sets the law? Who sets the law of the country?
Government.
Correct. Okay, government. So the ministers, right? Parliament.
Mhm.
Okay, parliament, government, they set the rules and laws. Right, who administers it? SARS. Okay, remember, the rules are set here, SARS are there. It's completely separate. Right, so what does SARS do? Sometimes they've got to interpret the law. SARS has to interpret what government has laid out in terms of rules and laws, and then they have to apply it. Right, and that's why you get these discussion papers, these interpretation notes, these practice notes. Okay, practice notes, interpretation notes, they're all the same thing basically. It's SARS's view on the legislation. SARS is giving us an indication of how they're going to apply the rule of law. Right, so here's some theory regarding residents and non-residents. If I'm looking at a resident, okay, natural person. Okay, remember natural, you and I. Okay, individuals, people. Right, can a person be considered a resident? Yes, and there are two scenarios. Scenario one, ordinarily resident, and scenario two, the physical presence test. Right, ordinarily resident, meaning, have a look, okay, where is it here? Country, country to which the individual would naturally return from his or her wanderings. Right, so it doesn't matter where you go. Okay, if you are a South African citizen, Okay, whether you work in Germany, whether you work in the UK, whether you work in the US, whether you work in Asia, whether you work in South America, whether you work in Australia, wherever, it doesn't matter. The point is, where do you consider home? Well, after you've completed your wanderings, okay, where are you going to land up? Where are you going to end? Right, and that's what you're looking at here. Sorry about that. I lost the connection for a bit. Okay, so just a note,
Yes.
what I
Yes, I
was
can.
saying here, just in terms of residency, when you look at an ordinary resident, okay, an ordinarily resident test is applied, and a natural person, so in other words, an individual, you and I, irrespective of where we go in the world, right, where are we going to return? That's the important bit. Right, so if you consider South Africa your home, you will be a resident. Right, so how are we going to be taxed then, Melanie? All right,
Yeah, it's
so
fine.
irrespective of where you are in the world, if you continue to come back to South Africa and you're considered a resident, then you're going to be taxed on what basis? What income would you have to be taxed on? Hey, Melanie, what income would a resident be taxed on?
Um,
Any idea? Think about it. If you went to Germany for a few months and then you went to Europe for okay, Germany is in Europe. Let's say you went to the UK. Let's say you went to the US and you did work in each of those countries, right? Would that be considered income?
yes.
Good. Okay, so how are residents taxed? Worldwide basis. Right. Irrespective of where you received the income, it doesn't matter where. It could have been anywhere. If you're a resident of South Africa, you have to pay taxes on that income in South Africa. Right. The second scenario is the physical presence test, and this is where they look at the whole 183-day rule. Okay, I'm mentioning it here. It's a little bit beyond the scope. You can go actually research this if you're interested.
Hmm.
It is on the sars.gov.za website, and they do talk about the physical presence test. Right, it's always an important consideration because sometimes you don't have to be a resident in terms of a citizen. Okay, you don't have to be a South African citizen, but if you are in South Africa for an extended period of time, you might still be considered a resident. Okay, even though you're going to return from your wanderings and you're going to return back to Germany, okay, or you're going to return back to the UK, wherever you came from. Okay, so you don't have to be a resident or a citizen, I should say. You don't even have to be um, you don't even have to want to come back and stay in South Africa. You literally just have to be in the country for a long period of time, right? If you are in the country for too long, right, you are then going to be classified as a physical presence test, okay, as a deemed resident of the country, and therefore you would have to pay tax on your worldwide income. Right, and that's quite a common thing to see in other countries as well in terms of legislation. Right, I don't know if you remember what we said in a previous class. We spoke about a double tax agreement, a DTA. Do you remember that?
Yes.
Okay, a DTA is a double tax agreement whereby that says that individuals aren't going to be taxed twice. So if you are taxed once on your income, you're not going to get taxed again. And that's something that's always held true in terms of different agreements with different countries. Because you might be working in Germany and then you're paying tax there, and then you come to South Africa because you're going to return to South Africa from your wanderings, and then you're still going to get taxed again in South Africa. Right, so South Africa does provide for that. And they do take, or they do offset, let me use that word, they do offset the taxes that you derive, not taxes that you derive, taxes that you pay in other countries. Right? If you've paid tax in another country, then they would obviously take that tax off in South Africa based on your return. Okay, because you obviously don't get taxed twice. That wouldn't be fair on the individual. Okay, the taxpayer. Okay, is that all right?
Yes.
Perfect. Right. The most important thing to remember, okay, for looking at income, okay, remember we're focusing primarily on companies, businesses. Right. So, how do companies get viewed as in terms of residency? Well, this comes from the actual SARS legislation. Okay, I've used this here because the wording is very important. When you are being given test questions regarding this, okay, you need to try use the legislation and the case law as much as possible. Okay, I mentioned case law in our first session where I spoke about certain cases being more important than others. Right, there are certain cases which are more important than others, and then you need to use those cases to your advantage so that you can get maximum possible marks in your answers. Right, so try use the vocabulary, try use the the wording that is provided in terms of SARS when answering questions. Right, when we talk about effective management, this is looking at the place where the company is managed on a regular day-to-day basis. Okay, so let's use your company as an example. All right, Melanie, would you say the effective management is in South Africa or is in Germany? Where is Mali effectively managed? Day to day running in terms of directors, senior managers, and people that have the final say. Is that coming from South Africa or is that coming from Germany?
I will say both.
But effective management. So, effective meaning who ultimately has the
I'll say South
final say?
Africa, Germany.
Germany. Okay. So then, based on what you've said, it's likely that Mali would be considered, okay, as a non-resident, as a company. Okay. Do non-residents pay taxes in South Africa?
Yes.
Yes, they do. But what do they pay tax on?
SARS.
Not SARS. They pay tax on South African
Sorry?
sources. Okay, remember the
Sources.
source of the income. Okay, so South African source or sources. All right, so if Mali has a South African operation, okay, that South African operation would have to pay taxes in South Africa, but only on their South African source. Right, so any revenue that's generated in Germany would obviously not be taxed in South Africa because, based on what you've told me, if
Yeah.
they're considered a non resident would only pay tax on South African source of income. Okay, other things to consider
Mm-hmm.
day to day operational management. Okay, do the decisions get taken in terms of day to day operations by the senior managers? Okay, in the place where the business is operated, okay, or conducted from or carried out. Right, so that's something to consider. So, in other words, where again is this whole idea of effective management? Right, is the decision making taking place inside, okay, the country or outside? And then the last bit, probably one of the most important points to consider is the place of the strongest economic nexus. So, in other words, where do you make more of your money? Okay, your rands, your euros, your dollars, wherever. All right. So the strongest economic nexus. So again, let's consider your company. Does Marley make most of their money in South Africa, or do they make most of their money in Germany? Where is the strongest economic nexus, inverted commas?
I will say Germany.
Okay, so then again, see, more evidence to state that Marley should be considered a non resident. Does that make sense?
Yes.
Okay, so non resident means classification of what? Income, and how is income going to be taxed? Okay, is income either going to be taxed based on the worldwide basis, okay, or based on a SA sources, South African source? Right, so if you've met that criteria, if you've met that criteria, and if you've met that criteria, well, then you can say, well, Mali is a non resident. Okay, so we're not going to pay taxes on any revenue that we derive outside of the country. Right, only revenue and income. See, remember the word income. Only income that's derived inside the country will be taxed inside the country. Everything else will be taxed elsewhere. Okay, does that make sense? Is that okay? Is that clear?
Yes.
Okay, perfect. All right, that's a
Yes.
very important consideration, especially for theory questions. Right, you might have a foreign company operating in South Africa, and then they talk about the effective management of the organization, etc., etc. Okay, it's all based on theory, and remember, even if you are considering your company as being a non-resident, SARS can still dispute that, and they can still take you to court, and they can query or argue the fact that, well, based on their evidence. Remember, burden of proof. Okay, burden of proof lies with the person making the statement, making the accusation, basically. So if SARS says, well, no, they don't agree that you're a non resident, they firmly believe that Marley is a resident, well, then they have to prove it. Okay, then the burden of proof lies on SARS. Okay, and then you get case law where you'll see this CIV. Okay, the Commissioner of Inland Revenue, not CIV, sorry, CIR, Commissioner of Inland Revenue. Okay, and the S, I think that is a SIR, something like that. Okay, but this is all part of cases. CIR versus SIR versus. Right, so that's looking at case law when SARS has basically either had to defend themselves, or when SARS had to prosecute, or yeah, I think prosecute is the right word, or basically give their state of affairs to try convince the judge of a different consideration or classification. Okay, and that's a dispute. So we say, well, okay, Marley believes they're a non-resident, but SARS believes otherwise, and that can go to court. And that's where you get all those court cases. Okay, the last part here, looking at study unit 4, is looking specifically at the structure, okay, income. Remember calculating taxable income? This is important, taxable income. There's the word taxable income. Okay, notice this is not tax liability. Right, this is working out taxable income for a business entity. It can be any business. Sole proprietor, partnership, company, CC, whatever. Okay, we're obviously going to be focusing on specific types of businesses, generally companies in most cases. So the financial year end is important. The financial year end doesn't have to be the same as an individual, it can be different. Right, so that's the line that I'm looking at. I'm looking at what goes here. Okay, what goes under this heading? Okay, remember you need to leave space in your exam. So there's going to be lots of space in between here. Okay, and then I can put all my income line items. I'm going to write each and every one down. And then I'm going to state why I've included them. Okay, that's the approach that you take when looking at tax. Okay, so that's what we're going to be focusing on. Right, so residents we spoke about. There's the note in your slides. Residents are taxed on all of their worldwide income. Non residents only from a South African source. That's important. Okay, in other words, if I'm a non resident, I'm only going to get taxed on income that I derive from the country in the country, and that's it. Okay, what does the word deemed mean? Do you know?
Um, no idea.
Okay, deemed means like appears to be or assumed to be.
Okay.
Okay, so if something is deemed to be income, deemed means it's seen as being income. It appears to be income. It's assumed to be income. Will you get taxed on your deemed income? Definitely. It's also included. Right, and then the last bit that we need to look at here in terms of theory, what is the source of the income? So, in other words, what caused the income? So, in other words, if I have a building, okay, that building is being rented out, okay, what is creating the income? Is it the building or is it the workers inside the building? What would you say? What's creating the
The
income?
building.
Yes. Okay, so you need to look at the location. Okay, you need to look at the cause of the income. Right, so in other words, the building is generating the rent. If you didn't have the building, you wouldn't be able to collect rent. Right, the people occupying the building are the ones paying for the rent, but the building itself is the actual cause, okay, or the root source. Okay, the cause. Okay, the creation. Okay, the creation of the income. Right. So that's something that you also need to establish. Right. How is the income being created? How is the income being produced? Right. So if you're manufacturing, right, if this was a manufacturing building, well then the products that I'm selling, okay, those products would be generating the income. And then I need to know, well, where am I selling those products? Am I selling those products in South Africa or am I selling those products abroad? Okay, if I'm selling those products abroad, okay, let's say I'm exporting the goods to Germany, okay, but I produce the goods in South Africa. Again, it comes back to this: what is the income source? What is the location of the cause? Right, so the question is, well, where did I produce the goods? In South Africa. So if I produce the goods in South Africa, even though I'm selling the goods in Germany, it's still seen as being a South African source because the location is important. The creation of the income is important. Where is the income being derived? That's something to consider. Okay, so that's the hard part. The easy part is applying it. Right, so when you look at the legislation, you'll see it's actually not that difficult to apply when you've got different test questions or activities where you've been asked, do I have to record the income or not? That's something to consider always. Right, so what is your first step? Well, step number one, gross income. Remember we spoke about gross income, exempt income, and special inclusions. Okay, exempt
Yes.
income means it's income, but it's taken out of the gross income. Gross means everything. Okay, everything. Right, and then you've got special inclusions. Special inclusions are basically income type of, let's say, receipts. Okay, things that we are generating in terms of inverted commas deemed income, but it's not specifically gross income, but it is deemed to be income, and that's why we include it. Right, so anything that's appeared to be income can be specifically included in the actual counting records, okay, in the tax refund, in the tax assessment. All right, so first thing we need to look at resident versus non resident. That's the first step. Right, so in other words, are you based inside the country or aren't you? Right, that's something that you'll always have to discuss. So when you're given a test question, always establish residency. Am I in the country or outside? Second step, what defines income? Right, and there's a very, very, very specific definition. Okay, we'll look at it. I've given you a slide about that. Okay, there's a slide that we're going to use as a checklist. Okay, and we literally just go down the checklist. Yes, no, yes, no, yes, no, and we check. Is it considered income or isn't it? Right, the last step, the third step, is taxable income, right? And remember, when we look at taxable income, we need to take other things into consideration. Are there any other exempt items? Okay, are there any special inclusions? Okay, those are other things to consider when determining the taxable income. But obviously, you need to take other things in terms of deductions, okay, and taxable capital gains into consideration, because taxable income is the last line on the formats. Okay, are you still with me? Is that making sense? Is that okay?
Yes.
Okay,
Yes.
so I've just put a slide here. This slide is important because it highlights the gross income definition. Okay, this you can highlight and make a note. This is important. I hope the page number is still the same. Remember, you sent me the updated version of it, so just check the 2020 guide and just to make sure that that is the page reference. But if it isn't, it doesn't matter. You'll see it in the actual chapter. Okay, this is study unit
Yeah, it's
4.
fine.
Okay, those
Okay.
are the listed requirements that we need to discuss. Right, in terms of exams, you have to outline all of them. Right, so it's a good idea to just study this. When you go into the exam, you literally write them down, okay, and then you've got to go to the question, and then you've got to motivate why you think income, okay, is income. Does it meet the definition? Right, and that's the approach. Right, so this slide here is important because you've got the definition here. You've got the requirements. Right, all 5 requirements have to be met in order for something to meet the gross income definition. Okay, and if it's gross income, you have to include it. You don't have a choice. Right, if it doesn't meet all the requirements, then it could also be a special inclusion, right, where it's specifically included. So, not meeting the gross income definition, but still included. Right, sometimes you get the opposite, okay, where you have something that meets the definition, okay, but is exempt. Right, so in other words, it meets the definition in terms of the gross income definition. It meets all the requirements. In other words, tick, 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 tick. But it's special because SARS provides for exempt income, and then you take it out, you remove it. So in other words, you don't get taxed on it. Right, an example that I can maybe give you, okay, maybe you have dividend income. Okay, as an individual, right, if you hold any equity or if you hold any unit trusts, okay, or even retirement annuity, whatever. Okay, well, RAs are a bit different because it's taxed in the fund, but if it's separate, dividends, right, dividends would be considered exempt. That's an example. Right, another example. This you probably have interest. Okay, interest is exempt. Interest, is it a total amount? Yes, it is. Is it cash or otherwise? Yes, it is. What did I receive interest? Yes, I did. Was it during the year of assessment? Yes, it was. Does it exclude capital nature amounts? In other words, I didn't sell a building. Okay, I didn't sell an asset. It doesn't. So see, it meets the definition, but it's interest. So if it's interest, it falls outside the scope, and you'll actually see it here. It's called a basic interest here. Interest. No, that's for something else. That's for withholding tax. Let me show it to you. Here, interest exemptions. There's it. All right, so there's the note about interest. All right, so as an individual, okay, if you are an individual under the age of 65, okay, which I assume you are, I don't think you're older than that. So this is the total. So we would be able to claim 23,800 Rand a year in terms of interest that we've earned on our savings. Right, so it could be investment income from a unit trust, it could be a fixed deposit, it could be a savings account, whatever it is, it doesn't matter. If you are looking at interest, okay, interest only, Must I include the interest in my gross income? Yes, I do. Gross income definition, it meets everything. But interest is a exempt income amount interest. Right. So even though it meets the definition of gross income, it can be considered exempt, then you take it out. You still show it though. Okay, so in terms of the gross income, under income, okay, I'll write down interest. Okay, I'll write down whatever it is. Let's just say it's the 23,800. Okay, and then I exempt it. Then I say exemption. Okay, and then I show a bracket, 23,800. All right, and that's how you have to do it in your exam. Okay, you have to show it because gross income definition applies, and then you have to show the exemption, minus 23,800. You have to do it that way. Okay, because it's legally you are legally obligated to comply with the rule of law. Okay, so the law says gross income must be included, which you've done. But then certain exemptions can apply. So you show both. All right, and you should get marks for both in your test, in your assessments. Okay, are you happy with that? Is that fine?
Yes,
Yeah, this is
yes.
probably the most important slide out of all of them that we've seen so far because you need to know this. Okay, you need to know the gross income definition criteria. It's a very, 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 very common question. Almost all exams have a question about this. Okay, so
Okay.
while we're discussing exams, cases. Okay, I've given you a list. Here are some of them. Okay,
Yeah.
these ones are more important because these ones specifically relate to income. Okay, it relates to this chapter, chapter 4. Right, so in chapter 4, if I've been asked to answer a theory question about income, I'm going to be thinking about these cases. The Butcher Bros versus CIR, the Haldenays versus CIR, the CIR versus People Stores. Okay, and the FISA case is also important, but for different reasons. Okay, we'll discuss it just now. I've got a slide on it. Okay, so these cases, these three, you could remember. There are others. Okay, if you go to the textbook, you'll probably see more cases. You'll probably even see more than this. But those are the important ones because it actually relates to something that's part of this, the gross income definition. Okay, so remember I said, okay, exam technique, you basically give the criteria. Okay, once I've given the criteria, then I need to look at the question. And then I need to motivate. Okay, when I motivate, I need to look at each point and I need to explain it in line with this. Okay, the case law. Case law should be given additional marks. Okay, as I said, I'm not too sure. I've never seen the mark allocation from a UNISA standpoint. They just don't give out memos for this course. So we don't know if they will or they won't give marks. Okay, they should though. Okay, other institutions do. Okay, other institutions do award marks for cases that have been applied to different scenarios. Okay, so if you've been asked a theory question, if you remember this case, you literally you don't have to remember all the details. Okay, nobody's asking you to go study the cases word for word and remember and memorize it. You just need to know the judgments. Okay, and you need to know what it pertains to. So from this case, from the CIR versus Butcher Bros case, the judgment was relating to the ascertaining of the amount, cash or otherwise, which looks at this. Cash or otherwise. So this was the whole note in terms of accounting. Think about accrual versus cash. Right, so in other words, so what you could say, well, if I sell something on credit, I haven't received the cash. So is this still considered income? Well, obviously, because it's otherwise. See, does that make sense? Okay, so accruals are still included as part of cash. Not cash, sorry, as part of income. I said cash. Okay, so here's the notes. You've got others to consider, the own benefits, and you've got entitled to. Right, so those cases talk about, is it for the business's own benefit or is it for someone else? Right, and were you entitled to that income or weren't you? right? So those are some cases that you can make use of to help support your motivation. Okay, when you're applying this to a specific scenario. Okay, in a test question. Okay, there's one that's very important, and this one always comes up. This one I've seen more often than the others, and that's why I've given you a little note here. Okay, courts use subjective and objective tests. Okay, remember these are cases. Okay, if I'm looking at a case, I'm focusing specifically on the law of precedence. All right, so for this one, I'm looking at the tree and the fruit principle. This is the CRR versus FISA case. Okay, it's quite an easy case to remember because if you look at FISA, think about a boat. Okay, and you're fishing. All right, we're looking at the FISA case. The FISA case talks about tree and a fruit. In other words, what is capital in nature versus what is income? That's what it's distinguishing between. Right, if something is capital, what tax do we apply to capital receipts? Do you know?
No.
CGT, capital gains tax. That's coming up later in your module. Okay, what do I apply to income? Income tax. So income is income. Right, so this is a very important distinguishing case because the case actually talked about this. If you go read the details of the case, you'll see they talk about this principle, the tree and fruit principle. Right, so here's the tree. Okay, and then here's the fruits. Right, so what the judgment of the case had indicated is that capital, okay, capital, is capital the tree or is capital the fruit? Which one is it? Which one do you think it is?
The tree.
Very good. Okay, this tree is seen as capital in nature. Right, so if you sell the tree, are you going to include that in income for gross income? If you sell the tree, what do you think? Yes or no? Would you include that as income?
Yes.
No. If I sell the
Yes.
tree, it's capital. I can't.
No.
Okay,
It's
so go
capital.
back, have a look at the definition. Okay, total amount. Did I receive something? Yes, I sold the tree. Did I receive money for the tree? Yes, I did. Was it received by accrued to in favor of the person? Yes, I sold my tree. Okay. Was it during the year of assessment? Yes, I sold the tree this year. Excluding amounts of capital nature. Okay. If I'm selling trees, cross, it's capital. Okay, so does it meet the definition of gross income? No, it doesn't. Okay, so would you include this in gross income? No, you won't. Okay, but are you going to include it? Yes, you will, but later on as part of the CGT, capital gains tax. Okay, remember this diagram here? Okay, there's the capital gains tax.
Yes.
This is where capital receipts go. Capital receipts are included as part of the capital gain, not as part of gross income. Okay, this gross income is what we're determining. Okay, so the rules tell me what to include here in terms of income, not here in terms of capital gain. That's a separate study unit. Okay, does that make sense? Is that clear?
Yes.
Okay,
Yes.
good. All right, so this is important to note because things like capital in nature are excluded. The fruit, okay, is income. And that's what you have to do, okay, when you're given a theory question. Okay, the income is the fruit. All right, so I like to remember it this way. Okay, I just remember the word FISA, okay, FISA case, and I just look at that first bit. Okay, FIS. Okay, I'm just thinking about fishing. So when I think about fishing, I'm looking at the boat and then I'm looking at the fish. Okay, obviously, if I'm catching fish, fish is the income, the boat is the capital. Does that make sense?
Capital. Yes.
Yeah, so that's tree and the fruit principle. So that's how I remember that for this principle. Okay, tree and the fruit, first case. All right, so try use those things to help you motivate in different test questions. Okay, then just to summarize, okay, the different tests, you get subjective tests, you get objective tests, and this all relates to this, income. Okay, so what else can you consider? Well, when you're motivating why something is income or why something isn't income, sometimes you've also got to consider subjective tests. Subjective means room for interpretation, okay, bias. Okay, objective, unbiased, no interpretation. Right, so you might want to use facts from the actual scenario. Sometimes the scenario that UNISA will give you will describe certain things. Maybe they'll tell you you bought it a certain way. Okay, maybe we bought something to sell. If I bought something to sell, then I've obviously got income. Okay, because there's an intention to sell. Right, so objective tests, looking at the manner of the acquisition. Okay, how did you buy the item? Looking at the period, how long was the item held for? Was it held for longer than 12 months or less than 12 months? If it's less than 12 months, it's probably going to be income. If it's longer than 12 months, it's probably going to be capital. Okay, long-term asset basically. Manner of disposal, how did you sell it? Nature of the disposal, okay? Reason for the receipt, legal nature of the transaction, accounting treatment. Right, these are just some objective tests that you can include as part of your motivation when you're motivating whether something should or shouldn't be included as part of income. Who does the burden of proof lie with? Obviously, the person that's being questioned. Okay, so if you're questioning whether you should or shouldn't include something in your income calculation, you might have to prove that if this is a dispute that you need to take up with SARS. Okay.
Okay.
All right, and then I've just listed some of the special inclusions here and the exemptions. You will see them in different test questions. We'll look at them later on when we start practicing that. Let me use the same color actually. Okay, so the first one, special inclusions adds to taxable income. Okay, Melanie, do special inclusions meet the definition of gross income?
No.
No, they don't. Good. Okay,
Mm.
they don't meet the definition, but they are specifically included because of the law. Okay, SARS states that sometimes certain of these things don't, okay, meet the definition but are still included. So these are some of the examples: lease premiums, leasehold improvements, proceeds from the sale of a disposal, dividends, key man insurance proceeds, recoupments. Right, all of them don't meet the definition of gross income. Okay, they fall flat. Okay, most of them fall flat is because of this capital. Okay, it's capital in nature for most of them. Okay, so if you go back to the definition, you can see this one, this one, this one, this one, but most of the time, the last one is excluded, excluding amounts of capital nature. Okay, if you look at a lease, what is the lease for? It's for a building. Okay, the lease for the building could be seen as capital in nature. Okay, and that's why it's excluded, but it's specifically included based on the legislation. Okay, and then you've got the other option where you have something that is included. Okay, so exemptions. Exemptions meet the definition of gross income. It meets that, it meets that, it meets that, it meets that, it meets that. But it is removed from the taxable income. Okay, taxable income, the thing right at the bottom, not the thing at the top. Okay, remember the templates.
Yes.
Gross income, taxable income. Okay, so dividends, see, there's it there. I've given it to you now in the notes. Interest, those are the common ones. Okay, as long as it meets the definition of the legislation. Government grants, okay, Those are some of the ones they've mentioned, okay, in your textbook. All right, and that's the end of this chapter. Okay, it's quite a heavy chapter in terms of theory because this is the first time that we're actually looking at the legislation. Right, so maybe just to highlight one or two things just to sum up. Okay, most important, residence. Non-resident or resident. Second thing you need to look at, gross income. Is it gross income or isn't it? And then if it's not gross income, will it be an exemption or will it be a special inclusion? Okay, and remember this relates to the taxable income calculation. Gross income is at the top. Okay, you've got less deductions and allowances. And then you've got add capital gain, CGT, or capital gain rather, forget the T because that's tax, and then taxable income. Okay, and that's the most important bit. So just to summarize the most important points, you need to know what the residency is, basically in terms of non-resident versus resident. You need to know the definition. The most important thing is that. Okay, do you know what the requirements are for gross income? Right, and then those other considerations relate to exemptions, special inclusions, and then just how it fits into the calculation. Okay, there are some examples in the study guide that you can actually have a look at. They've given you answers as well there. So you can read some of those scenarios where they talk about different situations and then they actually break it down. They take you through the definition. Right, I'm going to do the exact same thing, but I'm going to do it for past papers. So at least we can look at those and we can practice answering questions that are at the right level, okay, in terms of standard.